Good day, everyone. Well, the roller coaster ride continues. We look to have maybe put in a significant low here. The markets, the Nasdaq undercut a prior significant low by a hair, and now all the markets are rallying. And as we know from what these markets tend to do is when they sell off quite a bit, the volatility does increase. And so today's action, which is a bit of a it's a bit of a dizzying ride, but it's not surprising. The VIX model went to a sell signal, in other words, buying the market, thinking it's going to go higher, and it was immediately cut off from that when the failsafe triggered. The model thrives because it will be very quick to cut its losses. And that signal, I think, was about a 2% loss or so. So it's back on the sell signal again because the markets then came back with fury. And hopefully this is going to be a legitimate bounce of some sort. But that said, the model has a very tight fail-safe. So if this signal doesn't work, you're going to be closing it out probably at about break even or maybe 0.5% loss. The model doesn't mind taking these small little losses because when it does make a gain, as you've seen, it's quite appreciable. So you just have to stay tuned for that one. As far as the general markets, I would say that we still are in a downtrend of sorts. I'd say on a larger level, longer-term scale. The tops take a long time to materialize, but it looks like that the markets are or have been putting in very significant top. The Russell 2000 is in bear market territory, having hit its 20% mark off its peak yesterday and then today, and we're looking at that while this bounce may be one that where the averages start to go toward their old highs, the overall trend, meaning over on a monthly or say weekly level, the overall trend I think is still to the downside, and we've had a lot of damage done in the leading stocks. The FANG stocks, for instance, which were very quick to hit new highs, but they're all now under significant resistance levels. So they've got a lot of overhead to work out, and there's no sign that the markets, the economies globally are turning a corner. So China's, of course, has its share of troubles over there. And then the Chinese government continues to devalue the yuan. So I think that we're going to be in for some more volatile times this year. It's good to see this because it's a step away from, say, the markets of 2013, 2012, 2013, when QE3 came into being. And as you all know, those are very hard markets to trade, even though the trend looks like it's going higher, but it's just volatile enough to get you out of your positions, and then the market would find a very shallow floor, typically a 4, 5, or 6% floor, and then start heading higher and hit new highs. And they kept doing this over and over again. So it's
looks like Dr. K dropped out there. Does everybody else hear me okay? Okay, well, I guess it's that Brazilian internet having a little issue there. So, but I'll just continue with the discussion. I think, you know, the bottom line is this: if you were working the market on the short side, starting early in the year, and you had some things setting up. I mean, we've been short Apple. I think the three stocks we've been talking about, at least in the reports, has been Netflix, Apple, and Tesla, and those have remained short sale targets for the most part on the way down, and they've basically come down into levels where they're so far deep in their patterns. If you look at, I mean, the Nasdaq, the action in the Nasdaq is being mimicked by you know, all the stocks. So if we look at Tesla, we have you've undercut these lows. You got down and undercut the let's see, I'm gonna, whoops, you know what, I got to go to the stocks here. So, Anyways, let's take a look. So you can see, so I was watching this morning, and sure enough, the Nasdaq undercuts the 44, I think 87 level. I think it bottomed out at 44.70. I think that was the low. And so when you see that happening, it's like, okay, here we go. The rally is starting. And you know, to cover your positions, you're getting an undercut and a rally, and it coincides with it happening in a lot of stocks. So you see, for example, the low here in Tesla is 193.38. That's undercutting the 195 low that we saw back in October. So that's an undercut and a cover point if you're shorting the stock. So I think it's got to rally back up into this level, maybe up into the 215, maybe the 210, maybe not much at all, depending on what happens from here in the general market. But I think you're going to get a lot of shorts trapped here, and they're going to start flipping this thing to the upside pretty hard. Oh, you're back. There you are. You disappeared for about 5 minutes there.
Oh, geez, really?
Yeah.
Okay, you know what?
So do you want to pick up where you left off, or do you probably dropped out? Pardon me?
I'll pick up. You know, it's just so annoying. This internet goes down once a day for about 1 minute. It must have just decided right then and there, right when I started talking, to do that. You know, yeah. Murphy is always trying. No, I was saying that these markets tend to be very roller coaster when they sell off, and what we're seeing here is. You got the part about the undercut of the Nasdaq and how it is logical for the market to stay some sort of a bounce here, and therefore what we're seeing here is a potential bounce that could persist for a couple weeks, but the overall downtrend is still intact. I mean, these tops take a long time to form, but it looks like a top is being put in place by the markets, and therefore we've got a lot of volatility on the way, I think, for this year, which is good for the VIX model. It does thrive in those environments. But even if we get some sort of a bounce here that persists for a couple of weeks, where the averages start to approach old highs, we will see the VIX sticking with that trend. It does do well in uptrending environments. The MDM right now is eyeing a potential buy signal because of all the parameters that I mentioned. And you know, we're in very unprecedented times. Because I was saying about the Fed and how they manipulated the markets higher in 2012, 2013 with QE3, and how the floors were so shallow. You know, 4, 5, 6% floors where everything looks like it's going to blow apart, and then it comes back. Oh, geez, you know what?
Are you there? Looks like his internet went out again. Everybody can hear me again, though, right? Oh, this is fun. Anyways, let me just pick up where I was at before Dr. K came back on. We'll see what happens there. But you know, I guess Brazilian internet isn't all that hot. But as you can see, you get the undercut on the Nasdaq. It coincides with Tesla undercutting a low. You have Apple got close to the August 24th low, but you know, this is kind of no man's land in here, because a lot of that was due to funky orders getting triggered, stop orders getting triggered here, and they took them out low and then closed it higher. So it's undercutting all these lows, 100 levels, so it's in a position to rally. So I mean, it makes sense. If you're short and you're feeling piggy and you see the Nasdaq undercutting a major level along with all these stocks, then you should probably be covering. Netflix right to the 200-day. Bingo. That's a nice 3-day trade. We talked about that yesterday in the Market Lab report, the pre-market pulse. Said it was shortable here using the 50-day line as your stop. Boom. You get a quick 10%. Actually, I take that back. More like 16, 17% down to the 200-day. Notice how it undercuts this low as well. And, you know, that's it. That's what you get, and you take it. And on the short side, you've probably been feeling a bit piggy. Nice way to start out the year. But still, you know, it's only January. It's only the second week of January. So I like this comment. Brazil is in a depression, must be affecting their internet. Yeah, it appears to be. But anyways, so I think we've seen this picture before. Okay, you get all piggy on the short side, you make a bunch of money, you feel like the end of the world is coming, and they flip the whole thing on you. But it all makes perfect sense from a technical point of view because you undercut the lows here. I bet you the S&P, it didn't actually undercut, but it found support. What's interesting here is unlike the NASDAQ, the August low is not that far below the September low. You can see on the NASDAQ, that low is much lower than the September low. But for the most part, this is finding support along these lows. So on the pullback here, it found support along that low, and now you're having the same thing happen again. And look at this chart. I mean, look at this drop. Okay, are you telling me we're just going to go straight down? Maybe. I mean, there's always that possibility. But the odds are, and for anybody who's an experienced short seller, that when things start feeling a bit piggy and you're seeing stocks undercut prior support levels, such as we just seen in our three biggies that we've been focusing on the reports that go out to all members. I mean, I've talked about a lot of other short sale targets on these webinars, but if we consider those to be the three, quote, public, end quote, short sale targets that we put out to members, those all have hit levels that you could consider to be downside cover points. So it's fairly academic in my view. You just come in and you cover your shorts, and you're very happy starting out the first, not even the first 10 days of trading, the first 8 days, right? No, 9 days of trading, and everything is beautiful. So not much to say other than the fact that you're probably going to get a nice blast to the upside from here. How far that carries, it's hard to say. From here, you could head all the way back up to 4,800, even 4,900, which is along these lows in mid-November and mid-December in the NASDAQ. Same thing in the S&P 500. And you notice as you came down, you found support along this area of congestion here on the S&P 500. And then you finally blew. Oh, there you are again, Dr. K. You went off the air once again, so I kind of picked up. But
that's fine.
Yeah, I think the story is pretty clear as I was telling everybody. You know, you came down hard, you've undercut some significant lows in the indexes, and now you're going to rally. So there's no point in trying to keep shorting this market. Now you just want to watch and see how the rally carries out or plays out.
Yeah, no, exactly. You know, I was saying that with all the Fed Reserve central banks around the world manipulating markets, at least we're a step away from 2012, 2013, where the market's floors were so shallow, typically 4 to 6%, and then it would look like everything's going to blow apart, but then they would go higher and hit new highs, and so it was very exhausting to trade that kind of manipulated environment. And I don't know if you've heard this part, but you know, I'd be hard pressed to see a chart pattern like the NASDAQ or S&P in those years reproduced anywhere in market history, simply because we haven't been in this kind of situation where the Fed is manipulating the markets as much as they have.
Right, and that's happening on a global scale.
More pronounced and more difficult to navigate. Yeah. And then, you know, at the same time, the tops take a long time to form. I think we've reached a talking pattern of some significance, especially with Russell now in bear market territory. And so, you know, this bounce may be, it might be a 2-week bounce. Maybe, you know, the market averages struggle to attempt to hit new highs, but I think the overall trend is still down. So, you know, I think this bounce will provide additional shorting opportunities.
Yeah, so I think you just watch the bounce. I mean, that's all you can do at this point. You come down hard, and the break is now complete, I think, unless unless it turns out to be a very short undercut and rally, and say the NASDAQ only gets as far as, say, I mean, if you had to draw sort of an axis line, I sort of see one here, And of course, we see one here at the 4,900 level. So either one of those levels could be resistance. 4,700 maybe also. It's hard to say. I mean, I think you just have to watch and see how the stocks in general act. But I think you could play some stocks on the upside for a trade. So, there's a couple of things I was watching this morning. Netflix, of course, it's a cover at the 200-day, and then you catch it on the bounce. I mean, that's a possibility. These are trades for rapid fire traders who can keep tight intraday stops and then play them out, and they know what they're doing. If you're trying to invest for the long term here, I don't really think that that's an advisable situation. So I'm going to go through some of the shorts that I've been watching. So if we look at, say, LinkedIn here, you see how it comes all the way down on top of this area right here. So you have this area of congestion. Let me see if I make that bigger for everybody. But you see this area of congestion here between September, mid-September, mid-October. And you come down on top of it. You're way down. The last short points, we've talked about these, or this one actually, as it was rolling below the 20-day line after it failed on the running through the, or breaking down below the intraday low, 236 intraday low of the BGU, the Bible Gap Up. And it's tried to rally back up into that level. You'll see that here, and both times it ran into resistance at either the 20-day or the 50-day. So the last reversal was at the 20-day, and that was pretty textbook, straight down to the 200-day. And then it gave you another chance if you're alert to this on Tuesday morning. Was that? You bounce on an intraday basis right back up into the 200-day line. Now you've continued lower. So now you're on top of this area. So you're getting to what I would consider a cover point. So, if you're shorting now, it needs to bounce up to the 200-day line. But of course, you have earnings coming out. So it'll be interesting to see if this undercut and rally move today doesn't last more than a day. I mean, I think things are pretty weak in general in terms of the economy. And so it would not surprise me to see it reversed, although I would expect that you're going to see much more of a rally. So you'll see the market start to come in, and they'll draw in shorts who want to hit it, who are just convinced that the end of the world is here, and then they'll ram it up their tail end there. So I think that's really the drill. Dr. K, you still there?
Yeah, I am.
Okay, I have a question. It says, Dr. K, do VVM, I guess that's the VIX model signals, do they tend to precede MDM signals? Did you get that?
There's no real correlation. VVM signals tend to be more frequent and when the market's volatile.
Yeah.
Can you hear me okay?
Yeah, we hear you're
Okay.
kind of in and out,
You're going to get more signals in these types.
So
it's strange because the internet seems to be working across the data stream, but maybe the audio is a bit off today.
Could be. So I don't know. Whatever. We don't need to worry about it and just carry on. But I think as we're saying, people, you're asking questions about do the VVM signals tend to do this or tend to. I mean, nothing tends to do anything relative to anything else. You might as well ask, do the VVM signals tend to correlate to Mars and Jupiter being aligned and the moon in the 7th house? It's kind of neither here nor there. And on top of that, how useful is that information? So, so we need better questions than that, Scotty. You're going to have to do better than that. Anyways, where was I? Let me just kind of carry through with, talking about some of these short sale targets. Oh, let's take a look at, God, you can almost throw darts here. Everything looks ugly. And there's Apple. Okay, so it's getting down to a point where you're a good 20% off your peak. And in the short world, that's a nice profit if you're short the stock from around the 50-day or along the highs along the 120 level. So it did briefly give us a pocket pivot, but that failed pretty quickly when you gap down here. And that's not all that uncommon. So now you're in a position where you might try and bounce around, but earnings are coming up. So with a lot of these stocks also, you've got earnings coming up, and I think that's a factor. Do you if you've made a bunch of money on the short side in some of these names, do you really need to sit through through earnings and play earnings roulette. So, you know, with something like Netflix, they come out with earnings next Tuesday. So do you really, you know, really have to play that? I don't know. I think it's too risky, and while the stock could blow up on earnings, it could just as easily present a gap up move that could then be shorted. So you kind of want to be awake or aware of that and ready for it when it happens. So it's starting to drift in a little bit. I think that what they do here is bait the shorts again and then turn it to the upside. All I know is I'm not looking to get short again. Not just yet, although they are taking some stocks over the top here. I'm watching Microsoft is another one. It's hanging along. It seems to find support along just under the 52 level, but it's running into some resistance around the 52.25 low of the BGU here. Yesterday, that somebody upgraded the stock and it reversed right at the 20-day moving average. I actually went short the thing here, and then this morning, as it was coming down and it started to turn, I'm just watching the 620 on this thing. And I'll just get out of the way if it starts to turn, and we get a MACD turn. We get a cross here on the moving averages down here, which to me just says just get out of the way and don't need to mess with this. Let's see. The market's sputtering a little bit, but I still think we'll see what happens. I still think they're baiting the shorts. We'll see. McDonald's was another one I shorted yesterday, and I actually added to it today and then covered on the turn. And it's back at 115.68. Somebody had some stock to sell this morning, and they were nailing this thing. Not too long off the opening, it hit 116.47. I think was the intraday high this morning right after the bell, and then it reversed. But as it was coming down, we got a little bit of a MACD stretch, and then you started to turn. And I've got a nice profit in this over the last 2 days. It's still a big stock. And if the market turns, it's going to turn with it. So I just take the profit, get out of the way, and look at possibly re-shorting. So, yeah, some of these things are looking a little sloppy. Starting to tempt me. Wow, that's pretty... coming down pretty hard now. Let's see. Let me take a look at this on an intraday. Let's look at the CompQ rather, the NASDAQ. Yeah, you round up off the lows you're pulling in. Hard to say. I don't know. Not. Let's see some other names. Google. Let's look at that. That was breaking down, and you've come down. Yeah, I haven't quite filled the gap, but you know that could have been shorted yesterday at the 20-day moving average. And now it's bouncing. It's undercut that low, and it's trying to rally. So you know, it could rally back up to the 50-day. But earnings come out in a couple of weeks. So do you really want to play with that? I don't know. I don't think so. Let's see. Amazon was another one. You know, that could have been shorted yesterday as it broke the intraday low here. I think that's 395 and change. So let's see. And now it's trying to rally back above it. It's finding resistance at the 600 level. I could see this heading lower to the down towards the 200-day moving average eventually, but you have earnings coming in and almost filled the gap here. You have earnings coming in at the end of the month, so do you really want to have to sit through all that? I don't know. Yeah, we're starting to bring things in here. Still coming in, still coming in. Let's see, Palo Alto Networks, we looked at that one, I believe. That one's, see how it's touching this low. It didn't quite undercut it, but it is touching the low and it rallies up. But look how far down it is. I mean, that thing's like it needs to rally from here. So, so that one was a cover this morning. Let me see, Priceline. Here's Priceline. Look at this. Here you're undercutting. Let me see if I can find any other. Now you're undercutting this low, not quite getting to this low here. No, I take that back. No, you've undercut this low, I'm sorry. And so that's a major low. The next stop would have been down here, but you know, you're pretty far down there as it is, and so it would make sense that you're going to try and rally from here because you're just so far deep. I mean, look at this stuff. This stuff is so far down there. It's I don't know. It's piggy, you know, on the short side. That's about it. So yeah, the rally is fading a little bit. So I'm kind of watching to see how this acts here. So I think, like I said, they could bring it in and then send it back to the upside again. So I'm watching some of these solars. Let's see, First Solar. Let's see what this guy's doing. He was breaking down, but he's trying to find support at the 50-day line. Let's look at Sedge. Solar Edge, trying to find support at the 50-day line. You know, some of these could bounce. That's where I'm looking at. I think the solars, like I was saying, if I had to pick a group that might have some potential next year, I'd go with the bigger solar names rather than some of the smaller ones. So, okay. Yeah, see how they're bringing it in, and what they're going to try and do is bait the shorts, and so now we're trying to turn the upside. So watch this. But the bottom line is, I think if you're looking to get short here, then you definitely just want to wait. You don't need to start getting all piggy and getting excited and trying to get short everything on any kind of a bounce, because you're in a position where it could sustain itself, and you could be shorting and then wake up to the next day where they got it up 200 points on the futures or something like that. So you really have to take into account where you are in the overall scheme of things. And I think you're set up for a rally, and it may be a 2 to 3 day rally, and so I would just let it play out. Okay. Perhaps we need to undercut the August low in the S&P 500. Well, all you needed to do is undercut the September low on the NASDAQ, and you've triggered a rally. So a lot of people might think you're going to undercut these lows down here. Maybe you do, maybe you don't. I don't know. But I'm not going to assume that you have to, because the S&P 500 has already more or less run into its August lows. And I think at the very least, what you're looking at is some sort of rally being triggered on the upside, and that's what you're basically watching for. So, but it's a fluid situation. See, now they're turning the Dow back up 150. They had it lower. $155 now. Anyways, let me go through some of these other. This one's filling the gap and trying to turn, so that looks kind of interesting. I think the fundamentals are still good, so that might be good for a trade back up to the 20-day. First Solar, possibly. Solar City, let's take a look at that one. Busting its 50-day moving average, but that's starting to look a little bit obvious, so it might find some support, so you might watch for a reversal back up through the 50-day. Although these guys, this one and Run, the solar installers are under a little bit of pressure today because the Nevada PUC, or Public Utilities Commission, has also said that they're not going to review installations or something that are ongoing, whatever. Now we're up 161, 162. So see how they'll do this? So they'll bait the shorts and try to bring them in, and then send it back up. So that's usually how it's worked. Now, if we reverse again, then we're really weak. So maybe we do undercut the August lows on the NASDAQ, or maybe just completely clear the lows, the September and August lows on the S&P 500. So I think all that has to be watched. But you know, you're sort of in no man's land right now. So trying to get short here is a dangerous thing to do, and it's very obvious. So. Any really good questions does anybody have? Other stocks I've noticed, this is one I was shorting to start the year out, was Morgan Stanley. And it was hanging on this bounce here after it gapped down and bounced up into overhead resistance along this level here, which is like the 31, 32 level, and it rolled over and it just headed lower. So, you know, this is sort of a piggy downside break. You kind of have to... a move like this, you're down, you know, what, 4 points, 3 points, it's 10-15% by the time you get to the lows here, so you kind of have to take that. There's 3 ways I would look at figuring out where you're going to cover your stocks. You're either using a trailing stop, which would be the 10-day would be your nearest one in most of these, but in most cases it's so far above the stock that you really can't on a practical basis. And if it's undercutting a prior low, you could cover there. Here you would have been covering too soon, but you could see how that worked today, say on LinkedIn. And then finally, the last one is just using a profit objective. You get 10-15%. Like Netflix, you can use a couple of things here. You get a 10-15% profit very quickly off the 50-day moving average. And that's it. You know, you take it based on that, but it's also coinciding with a break to the 20-day. So, you know, you got a couple of reasons to be covering that on the short side. So, let's see. Somebody says, does this market feel like the dot-com meltdown in the very beginning? Well, the way a lot of things have broken down off the peak, it looks similar to it. But, you know, you're in a completely different era. You know, as Dr. K was saying, these are unprecedented times. So anything could happen here, and you have a lot of manipulation relative to 2000 in terms of QE and money printing. So I wouldn't get bogged down. I would say the breakdown reminds me of that, just the feel of it, the way things have come down so sharply. But in and of itself, that doesn't mean anything. You're not going to sit there and start shorting everything because it looks like it's 2000. What you need to do is just watch what the stocks are doing and watch what the indexes are doing in real time, and that will give you the guidance you need in terms of finding where you're going to short stocks and where you're going to cover them. So, and anything could happen. What if the Fed announces QE4? What do you think happens if the Fed announces QE4, Dr. K?
Yeah, I think we'll get a rally of some sort, a strong rally. Although, you know, in the past, the markets would generally materialize some sort of rally on that kind of announcement. So I would think it's going to repeat. But, you know, the markets are here to surprise, and you know, just because it did that the first 3 times doesn't mean it's going to do it a 4th time.
Right.
So again, you have to watch your stocks and the volume action, you know, like models do, because they don't really care what the Fed does or says. It all it cares about is what the volume flow is telling you.
Somebody says, somebody's commenting, it seems like shorting the rips is now going to be where the money is pending crazy Fed actions. If you're, see, again, that's sort of a generalized statement, but I think what it boils down to is what are the stocks doing and what positions are they in where they would become shortable. So I don't know about this sort of general rule about shorting the rips, but in general, you know, I will sell into strength, whereas weakness becomes a point where you're probably looking at buying in this market. So, you know, maybe that's what happens. Now we're up 120. So we are starting to see a little bit of it giving way. So, kind of interesting. Yeah, I think you got to see how this plays out. I could fool you. But right now we're getting into crazy land. So it's very dangerous to try and get short, period. That's my view. And you just got to let things settle out, and that means hanging out for a few days and just letting things play out. So, you know, rather than trying to get all excited over what you just saw, which is this, and thinking that, oh boy, I'm going to make a pile of money on the short side here, it's going to be real easy. No, you're in a very difficult spot to be trying to enter the short side. If you came in short earlier and you have a nice cushion, yeah, you can play around here and there when you see something rallying up into potential resistance. But I think for the most part, you're just asking for trouble if you come in here and start shorting aggressively. You know, so now watch the market will blow completely apart today, but we'll see. All I know is I'm going to take my best shots at the lowest risk points and try to keep my risk under control rather than just allowing my emotions to rule and my thinking that, oh, we're going to, you know, this time we're going to blow to pieces, because you generally don't. I mean, I don't think I've ever seen the NASDAQ down 8 days in a row like it was until Tuesday. So, you know, it could, it's just gotten long in the tooth. So somebody says, I think it would be odd if they started QE4 while they just started raising interest rates. Well, I think they're going to end up reversing interest rates. That's my thinking. So, you know, we'll see what happens there. But That's what I think they're going to end up reversing what they've done, because the U.S. economy is pretty slow. That last jobs number, I have to say I'm pretty well blown away by the uh, irresponsibility of the media. They fluff up the number. They go along with the number and talk about how strong it is, but everybody does, because they've all got to talk their book. But the real number, the raw number, was 11,000 new jobs in December. And then what the Bureau of Labor Statistics does is they make a 0.02%, so 2/100ths of a percent adjustment, statistical adjustment, seasonal adjustment, based on the assumption that most people are on vacation during December, which I don't know if that's true or not. I know kids are all on vacation, but I don't know that all people are on vacation during Christmas. So, but that's just a sort of an arbitrary number that they pick. And then what they'll do is add that. So, 0.02% of 146 million, which is the total number of people employed right now in the U.S., gives you 280. I think it was 281,000 jobs, something like that, that they add back in. So that's where they get the 292 from. And of course, everybody runs around talking about how strong that is. But the reality is, it's not a real number. It's phony, and it's all statistically contrived. So you can't really trust it. And the other thing is also GDP coming in at what, 2%, but the government assumes or calculates inflation to be less than 2% right now. But anybody who's going to the store or anywhere else knows that it's much higher. So
Yeah, all these numbers are quite distorted. The job statistics are much more telling in terms of unemployment, in terms of inflation, in terms of GDP. And so, that said, the Fed realizes that. So I wouldn't be surprised, actually, if things got much worse, the Fed would step in with some form of QE4. This wouldn't be the first time that they've made an error. They've made lots of errors along the way. And in the 1930s, you can go all the way back to the 1930s, and they did a token rate hike, and then that was it for years, as they were. That rate hike actually was not a good decision. So what they've done right now is they've laid the groundwork for potentially having to reverse that rate hike, dot plot or not. The situation that the Fed finds itself in, I think, is a very tight corner it's painted itself into, and it doesn't have a lot of options. So I think it would probably go along with the rest of the world and continue to relax the monetary policy, because I don't think the U.S. It's the tallest standing midget, but it can't persist alone. Everything's more connected than it ever has been. So if the rest of the world is failing, then I think it's going to ultimately pull down the U.S. as well.
Yeah, and they can always go to negative interest rates. So everybody talks about how they're so close to zero, they have very little wiggle room, but they could always go to negative interest rates. I mean, the EU has, so that could happen. Anyways, all right. So we know to cover shorts and to get out of the way and let this rally play out. And again, what I'm looking for intraday, see how they bring it in. And I just think that they're baiting the shorts here and trying to make it look like it's going to roll over again, because everybody wants to get short all of a sudden. And again, I can tell by my emails and tweets at how excited people are about getting short now. Even sales of the short selling book will tick up a little bit. And so you get a sense of when everybody sees the obvious. And in my view, that's the time to be covering and looking to take profits. And of course, it all coincides with the NASDAQ undercutting the September low, and the S&P finding support along the September low, and so on and so forth. So, that's where you're at. And you just have to heed that and take it from there. So, very simple. In the meantime, what do you buy on the upside? Well, there's really nothing breaking out. Does anybody see anything that looks good? Do you see anything that looks good to buy, Dr. K?
Not at this time, no, nothing.
No, the only thing you're playing are possible trades. Okay, you could have tried Netflix off the Intraday. So your short sale targets, you might flip those over, and those become longs based on the idea that they've undercut or run into an area of support and are now set to rally. And you figure maybe you got to trade up to the next level of resistance. So I'll do that. I've done that with a number of stocks in the past, and I'm looking at that right now. So, but we make it some back and forth today that lets you decide what you want to do, if anything. I'm just trying to look around right now and see if I see anything. Let's see, some other stocks that have been on my short sale list that I've made some money in. Baidu, was a short along the 20-day. I think we talked about this, but see, it's coming down into this area. It's filled this gap. It's testing this low of this gap up move here, and that's probably a little long in the tooth. And earnings come out, I think, in a couple of weeks, or within a couple of weeks. I forget. Maybe let me check that real quick. Yeah, 210. So not until there it is right up here. So not until early February. So, but that could rally all the way back up to the 200-day from here. Something's Chewy. Yeah, I don't. This is just a thin little stock. It trades 200,000 shares a day. If I wanted to get a meaningful position in this, I'd have to buy a quarter of the volume. So, to me, these are junky little names. I don't really play. If you have a small account and you like this, I guess you can try it. But to me, it's a junky little name. It's not an institutional name, but it'll get bought up by small cap funds. But I just don't see anything here that's all that attractive, frankly. So let's see. WebMed looks interesting, somebody's saying. So we'll go through some of these. Yeah, that looks exciting. Big, ugly reversal. So there's buyout rumors, but I'm not going to buy a stock on the basis of buyout rumors. So looks pretty ugly. So God, I don't see anything here. What's this? How did China Biologic do? See, this undercut the lows here. Now it's trying to rally, but it's right up into the 50. That was one that we had on. I'm watching Solar City turning here. Actually did buy a little bit back there when it came down. I was talking about it, and I don't know. We'll see what happens here. I don't have a lot of confidence in this, but I've noted in the past that when these things look so ugly and I don't have a lot of confidence buying them, I really want to short them. They'll turn on you, and a break of the 50-day becomes a little bit obvious. So, and this thing has, like, I don't know, what's the short interest on this turkey? Let me check this very quickly. Well, maybe not that quickly. I think the whole world is short this stock. As of 12/31, you had 25 million shares short. And what is the float on this thing, Dr. K? Do you know? Isn't it like 30 million or 40 million? Anybody know offhand? 40% of float. Thank you there. Let's see. Amberella. Somebody wants to buy Amberella or short it? I wouldn't short it, but it's deep down in there. So, I mean, that's getting pummeled along with GoPro. Maybe that's a low in GoPro, and Apple's going to buy them out for $12 a share. Let's see. IBB. Well, that's undercutting. You see this iShares, Nasdaq Biotech. That's undercutting these lows. So that might turn back to the upside. A lot of these biotechs are beaten down. I would go with the biggest one. So you see, Celgene undercut this low. Now it's trying to turn. I was short this one coming in this morning. I covered it. And let's see. Gilead's another one that's deep down in there, and that's undercutting this low. So you can see all of these are in an area where it makes sense to see an undercut and rally. So it makes total sense, that you're going to see this. Here's Amgen too. You've undercut this low here and this confluence of lows down here in October, and now you're trying to rally up. So, all of this is just reflected in that. So it's all the same thing. So you can basically extrapolate the action in the individual stocks that make up this index. I'm sure there's a few others, but the big ones I know are Amgen, Biogen, Celgene, and Gilead. And Biogen also coming down and undercutting these lows. This is what it looks like on a weekly chart. This is Biogen. So what have you done? You actually undercut these lows a couple months ago. This is back in October, and you're bouncing along. Earnings come out. next week, I think it is. And see, now you're up 188 on the Dow. So you see how they did that? They baited you in. Even got some of you to comment that the market's weakening. And admit it, when you see that, the market jumps up 200 points, and then you've just seen it come down for 9, 10 days in a row and just get blasted. Well, 9 days. Yeah, about 10, 11 days, I guess, because it started selling off 2 days before the end of the year. And you're seeing this, and you just want to get short it, right? Because this is your next great opportunity. And what they do is they bait the shorts and they turn it higher. Now we're up 189 on the Dow, so they're going to run this thing up a little more. That's what it feels like. So I'm not going to try and stand in the way. I'm actually going to look for things I might want to trade for some quick upside. So somebody else pointing out Constellation Brands. Yeah, something of a defensive name. So, and it's pulled back in, filled the gap. Notice how it got close. Probably. Let's see, I'm going to blow these up so I can see what the heck's going on here. Yeah, I found support right at the 10-day line here. So, yeah, it's trying to turn. So maybe that's one that might be worthwhile on a rally or on a bounce here. So I'm watching Sedge. I have some of that now. It's pulled in below 23. It got close to the 50-day here. So looking for a bounce off of this, off the line here. You fill the gap, and you could get a bounce up to 25, 65. That's a possible trade, but that's the sort of stuff I'll look for. I don't know if it works. In the past, I've been able to milk a few points off of things, but I have to admit I'm not the best deep down, or deep doo-doo bottom fisher. When things are looking ugly, my psychology wants to short them, not buy them. So I'm kind of fading myself, if that makes any sense. So MCD approaching resistance. Well, resistance to me would have been the 50-day at this point, because you broke down, you violated the 50-day on an intraday basis. Actually, this is showing it closing above. Yesterday on another chart I was looking at, it was showing it closing just below, but I'm not sure what's up with that. It could just be one day was added to the moving average and it slightly shifted it. I don't know. But the other thing to think about here is this, before you want to jump all over this on the short side, is number one, this is a stock that broke out of a base here, okay, in early December. You had a Bible gap up here, and you kind of trundled higher, a little bit like Amazon and Google after their Bible gap ups in October. And then you broke out and you run down. You're not failing yet on this breakout. So the other thing to think about is this. This morning, they were hammering McDonald's. Somebody had a bunch of stock to sell, apparently, and they hammered this thing down to 113, I think. What was the low? Low is exactly 113, actually. And a lot of times, the best stocks holding up, when they start to break, if that's coinciding with the indexes undercutting a major low, as the NASDAQ was doing this morning, then that's telling you that now they've gotten to everything. And when they get to everything, that's probably it, So in that sense, you might look at names like Constellation Brands, finally breaking down and looking like it's failing on this breakout, but now it's filled the gap. It's holding the top. So I would say it should hold the 20-day, which is at 143.85. So possibly a low risk trade for those willing to do that. So somebody wants to go over the rule of three? Well, the rule of three is a pretty simple concept. It's something Bill O'Neill taught us a long time ago. It's basically that by the time something happens for the third time, it's become obvious, and the crowd has seen something happen once, then twice, and then the third time they're set up to be fooled. And that's basically it. And you can apply that rule all over the place. In terms of things, an occurrence, a technical occurrence, such as a test of support or breakout, where breakout fails twice and doesn't go any higher, and then on the third time it does work, and by that time nobody wants to even look at the thing. Same thing with a breach of support. Something tests support 2 times and it bounces, and then the third time it comes down again, and everybody wants to get long there because they've seen it do it twice before, and they get faked out and the thing breaks down. So that's basically the rule of three, and you have to be a little bit creative in how you apply it. It's not a hard and fast rule, but it does seem to hold weight sometimes. So we're up 180 now, spinning around, round and round she goes. Where she stops, nobody knows. I gotta admit, you watch this thing trade, and it's very hard to have any confidence one way or the other. I have to admit, I'm terrified the whole time I'm short over the last couple of weeks since the beginning of the year, even though the market just keeps breaking down, because at any point I'm waiting for some 500-point rally to materialize out of thin air. And that's sort of how this market operates sometimes, you know. So let's see. I think for the most part you can just go around and look at your short sale list if you're going to try and trade something on the upside. Otherwise, I would just hang back and wait for the next shorting opportunity, assuming that's the case. But also watch how some of these stocks act as they bounce off of support, because some might set up and flash bottom fishing pocket pivots and whatnot, and now everything's jamming to the upside. And so I think you have to be open to whatever it is you're seeing. You were saying, Dr. K? What?
No, no, it's fine.
Okay.
Okay.
So, you know, I think it's basically you got to watch and see what's happening. If you're going to take some shots, just know where your stops are. But, you know, you're sort of in a funky town, and anything could happen. We've seen the market over the last couple, 3 days. You know, it's up big at the open, then it's down big, and then it rallies back up to be up on the day. I think we saw that on Monday and Tuesday. And then yesterday it started out up big, and then it rolled over, and then it kind of fluttered around for a little while. It went down, it went back up, it went down, it went back up, and then boom, the whole thing just blew apart into the close. And today we started to look like we were going to break for lower lows, and everything was looking ugly, and then they just turn it on a dime, and boom, everything's running to the upside. So it's a little bit erratic, and it's very difficult to play either way. So if you're going to do it, I think it's for rapid fire traders and anybody looking for a real trend to develop. I think you can wait. We'll see things setting up better, and maybe some things emerge after earnings one way or the other. So in other words, you might see some stocks gapping up on earnings, and that presents a shorting opportunity. I think one of my best shorts back in July was Skyworks Solutions, which it was starting to break down. It was in this, you see, you had a breakout here, and then you had the failure in here, and then it was rallying back up to the 50-day, and then earnings came out on this particular day right here. And what happened here is it opened up in the morning and shorted there, and then boom, the thing gaps down or reverses and then gaps down the second day, undercuts this low, which could have been a short-term cover point because you've got a nice 15% or so in a couple of days, and that's definitely a gift horse. You don't want to look in the mouth. But it just had a little rally back up towards the 10-day and then broke down again, and then really busted into August. But this occurred, this opportunity to get short occurred on a gap down, or gap up rather, following earnings. So that you might see some of these names that are beaten down, you know, the LinkedIns and Netflix, even let's see, Facebook. So I think yeah, Facebook, you see right off the 200-day moving average. Does that make sense? That makes complete sense, right? Bounced right off the 200-day. That's a cover point if you were shorting it on this break of the 50-day. But you might see on earnings it bounces back to the 50-day and then becomes shortable again. So that's a possibility, something you have to just be watching for, and we'll see how this plays out in real time. So I don't buy into the idea that the economy is strong and it's surging and all this other baloney, because as I discussed earlier, the jobs number is completely phony. And of course, that's all you're hearing on TV, on financial cable TV, also known as the financial comedy channel, as I call it. And I get a big kick out of it. My wife's always giving me a bad time about how I scoff at everybody in the afternoons as I'm going through my charts and I have the TV on, just listening to the babble, the senseless babble that goes on. But you constantly hear people talking about how strong the economy is, and it's not. The jobs in the last report that were created were mostly lower wage service jobs. And then, of course, you get the big phony adjustment in the actual jobs number. So the 292 was really 11,000, but they had an adjustment of 281,000, I guess it was, and that's what made the number look so, quote, strong. So, and it was kind of funny listening to Obama talk, because he's talking about how strong the economy is, or how those who think it's weak are wrong, and then he goes through a bunch of reasons as to why it's so weak. Okay, go figure. But yeah, a typical politician. I'm not going to say Obama is any more of a liar than any other politician, because as far as I'm concerned, they're all liars. And the scary thing is that they're all in charge of running this country. So that's what's most frightening. So on the other hand, you know, you could look at it on the bright side. We've had probably two of the biggest morons on the planet as our president over the last, 16, 15 years, I guess. And the U.S. is still has not fallen off the planet. So maybe that is a positive. Any other exciting questions before we start to wrap it up? Let's look at, I don't know, I'm going to look at, let's go, some of the names I've been shorting and watching on my hot list over here. Give me a second here to get things set up and reorganized. This guy, he goes back here. I am sort of anal retentive about keeping things neat and organized, so I got to get this organized, so just bear with me here. Whoops. And bingo, there we go. Now we can move this guy over. Everything has to be arranged just so. So let's just go through all of these real quickly. Microsoft sputtering around, but he could rally back to the 50-day. That's a possible play. Panera was one I was hitting the last couple of days up here along the 102, I'm sorry, the 192 level, and it hasn't really broken down. It's sort of in a double bottom. I don't know. That's one that's actually holding up. So McDonald's is pushing higher. It's back above the 50-day. Maybe it goes back to the highs if the market does. Celgene, yeah, this one's hard to say. Maybe back up to the 108 level. Southwest Air is one I was short, and I've been shorting it along this rally up into this area here. It broke to the 200-day line yesterday, which to me was a short-term cover point. They come out with earnings, I think, next week. So we're up 194. They're going to draw in some more shorts and get them all scrambling. So don't be surprised if you see a huge up day. That could happen. And don't stand in front of it. I know everybody wants to postulate that, oh, we're going to undercut the August lows or it's the end of the world or whatever. No, the market knows that Donald Trump is going to be president. He's going to fix everything. So he's going to go around with a stamp that says great, and he's just going to stamp everything with great, great. And that's, you know, we're doing great. We're going to do so great. We're going to make such great deals, you know. Like I said, couldn't be any worse than the last two that we've had as president. Let's see, Baidu, possibly up to the 200-day line. How about Run? I've been following this one just because it's a solar, but that's looking pretty grim. Walmart, this was mostly a short up around this level here. Came down to the 20-day. I don't know. I'm not going to play with that. I was watching the airlines yesterday. They were nice shorts. Love, along with American Airlines, was a nice short. As it reversed near the 50-day line, pretty much right, you can see on the weekly down here, right at the 200-day line, and then blew through these lows, and now it's trying to bounce back. Buffalo Wild Wings was another one I was shorting along the 20-day. That broke down, and it's flirting along these lows. I don't know, could it rally? But that's mostly a short. Solar City, I'm long it now, praying, hoping that maybe I get a turn here. I'm not perhaps religious enough for that, but here's the 620. You're seeing a little divergence here in the lines and also the histogram here, so maybe it has a chance at turning. Another way to handle this would be to wait for a 620 sell signal and then use a 620 buy signal and then use a 620 sell signal to get out if it doesn't work. So First Solar, though, is probably my favorite solar. It's also Goldman Sachs' favorite solar, but that's already turned, as you can see. So maybe that's the one to get into. Workday, whoops, down here. That's kind of down deep, so yeah, not going anywhere. That could rally back up in the, say, the 20-day rather. So, but I don't know. That, to me, that's not a big leader. SunPower, look at that. Is that ugly? I don't know if I'd play with this one. Square, not really happening. Maybe it finds support along the 11 level like it did last week, and maybe it bounces back up to 12. I don't know. Facebook, of course, off the 200-day. Now look for a rally up to the 100 level. Amazon could rally up to the 595. Well, it's almost there now. If we look at this, yeah, you're right, rallying right up into that 600 level. I don't know. That's tough. Maybe it goes to the 50-day. Netflix, like we said, probably could head back to the 50-day, but you got earnings next week. Google could head back up to the 50-day. You know, these are all potential trades. So one way to handle these would be, again, you've got a 620 buy here. See, so you could have, it happens when it's extended, but then you get a pullback into the 20-period line. You could try and buy it there. I mean, these are techniques we've talked about it at length in the webinars, and these would be the types of techniques I would use to be buying stocks. So MACD stretches on the 620 chart or 620 buy signals are bouncing off of support areas, invoking the ugly duckling. So, and it looks like the ugly duckling has returned. So I guess he was, down in Cabo. Maybe he was down in Rio with Dr. K on vacation over the Christmas, New Year's, Hanukkah. Well, now we're into Kwanzaa too. So I think, or that already passed, probably already passed. But in any case, all those holidays he was out on vacation. Now he's back and better than ever before. So maybe now we're going to see a big jack to the upside. Barbarella, as I call it. Again, this is another one that I think is undercut. It's come down to this low, and you can see you're into this area of congestion here. Maybe it rallies. Let's see some more here. GoDaddy down along the lows here. Maybe this could find some support off of this gap up low. Let's see. Right now you are at the low here is 29.10. You're at 29.02, so you're just undercutting it. So that's a possibility too. That might undercut and rally. Where would you go? Maybe up to the 50-day. I think earnings come out next week or the week after. Salesforce, you are undercutting, well, this low here, but you're also undercutting the 200-day. This, I don't know, this needs probably to get above the 200-day here to look viable. Otherwise, it's starting to look shortable here. It could be. So I don't know if I'd touch that one. I'd keep it on my watch list as a short. Potentially. We see Tesla now pushing back above the 200 level and that 202 low here. So that's definitely not one I want to short. That could rally, like I said, up to 210, maybe higher. And let's see, Ulta. Somebody's asking about Ulta. Ulta's yeah, that's holding the 50-day. Maybe it bounces off. I mean, what would your stop be on that one? Your low here is 173.86. You're trading at 177.49, 53, 68. It's starting to rally here, but maybe that pullback will work, and it's holding the low of this viable gap up. So that could work. That's a possibility. I mean, you have to be somewhat creative and understand also that you need to have a tight stop if it doesn't work and know exactly where your out point is. But in this market, you've generally been better off buying into weakness when you get a logical point of support. So we have, to sum up, we have the indexes undercutting, the NASDAQ undercutting the 44.87 low of September, which sets you up after, for a bounce after everything has just been beaten to a pulp over the last 9, 10 trading days. And so knowing that, you set your out points, you look for a rally up, along with the indexes up to a potential area of overhead support, and maybe that becomes your target on the upside if you're going to try and trade them. But that's what we know for sure right now. So we know that you're in position to rally, and you got to let it play out on the short side. You do not get cute and try to catch things in midair. Just let them play out, and you may get some great shots in a week or two or three after earnings. Meanwhile, if we do bottom here and start a new rally phase, which I'm not going to discount that either, and I'm certainly not going to imprint into my brain that we're in a giant bear market and we're going to zero because the world is in such a terrible state. I'm just not going to get that stuck in my head, and I'm going to remain flexible and let things play out and watch my opportunities emerge in real time and just play them as they lie, so to speak. So anybody who plays golf knows that term, play it as it lies. So however it's lying, however the ball is lying, I'm going to hit it, anyways. I think on that, flexibility is key. Yeah, and just know where you're at. So, I think if you were short, you should be very happy that you've started the year out making money. I know I am. I gave a little bit back off my peak this morning on the turn, but I was waiting. We did come down hard, and I was waiting to see the turn, and then I'll cover as quickly as possible, but that could cost me 0.5% or more off of my peak. But hey, if you make 10-15% in the first 9-10 days of the year, that's not bad, and I think that's really what it boils down to. So don't be surprised if this thing goes up 350 or more and they just squeeze the shorts like they're in a big juicer. So, but I'm giving you some ideas. I don't know if anything's going to work here necessarily on the long side, but I know for sure that I want to let things play out before I want to start investigating the short side. So on that note, that's all we've got, I think. Dr. K, any final notes or words of wisdom? No, I guess Dr. K.
It's a very volatile market we're in, so maintain your flexibility. Can you hear me?
Yeah, we hear you.
Can you hear me okay?
Yeah, you sound fine.
Yeah, I was just saying it's a volatile situation. So just make sure that you remain as flexible as you can, keep yourselves tight, and roll with the riptides that get thrown at us.
Right, and just be ready to move quickly. If you're a short seller, you should by nature be a quick trader. On the long side, if you're going to try and play this, you probably need to be a quick trader in case things roll over again. So anything could happen. So just keep an open mind, though. I would say the most important thing right here is we know we're at a logical point for an undercut and rally. But you don't want to get locked into the idea that you have to short the rally. Just let it play out. Maybe you don't do anything for a few days. But just watch and keep an open mind. Don't get stuck in a particular bullish or bearish frame of mind. Okay. Anyways, that's all we got, you guys. Thanks for showing up as always. We'll catch you next time. Take care.